Welcome everybody to Parent Capital Investments. We've been doing this for a while, but now we've been doing it on Facebook, but now we're going into the YouTube channel. So if you enjoy this video, like and subscribe to the channel for weekly content. Alright, so going in, the thing that I wanted to start off the YouTube channel with was perspective floors. You hear it all the time, people posting on Twitter or Facebook or Discord. Of bottom plays. Oh, this is the floor level, and you might be asking yourself, what is the floor? Or people usually go off of other people's floors, but this video is intended to help you figure out your own perspective floor. But before we begin, let me read a brief disclaimer. I am not a financial advisor. Anything I say or mention is for educational purposes only. This video is intended for educational purposes. Buying and selling stock securities require a lot of risk, and it is your due diligence and your duty as a trader to manage your own risks. So, starting off, the number one reason that they say that like 95% of traders fail in the market. Now, why is that? What I've come across is usually, other than people just giving up too soon, what I see happen more often than not is people don't know when to get in or when to get out. They buy at the wrong time, they sell at the wrong time, they hold things too long. The list goes on of why people fail, and they say that only 5% of them make it. Well, we're about 2.5 years in on this, and I have developed a lot of different knowledge from other traders and a lot of things that have really worked for me, and this is one of those things that I feel should be incorporated into every trader's style if you're looking to be one of those 5% profitable traders. The intention of perspective floor is to help you develop discipline, really, is to help you develop discipline. So to go into this, I've got a little presentation for you, perspective floors, and then we'll go into, we'll review a few charts and basically end the video from there. So perspective floors. What is a perspective floor? You hear it all the time. Bottom plays. So what is a floor? A floor is referred to as the bottom play. You see it all over all the time, people referring to it as a bottom play. It's usually where the stock is the most hated. What I mean by that is there's not a lot of volume. It might be have had a previous run, and now at this point people have begin to sell it off. People have backed out of it. They've either lost a lot of money, and now it's gotten to a point where nobody really wants it. Nobody really wants to sell it. Nobody really wants to buy it. It's just kind of staying where it's at, and that's where we consider the bottom. Where there is most opportunity, which means that there's the lowest risk and the highest reward. And that doesn't mean that there's no risk, it just means that the risk is lower. It could obviously still go lower than that floor, but by implementing where the floor is, and we identify where the floor is, we know when we should probably just give up. It is your personal perspective and yours alone. I see it all the time of people asking, where's the floor? What do you see the floor as? But the real truth is, it's your personal perspective and yours alone. My floor of a stock is going to be different from yours, and yours is going to be different from the next person. It's all going to be dependent on where you got in and what you see on the chart. Your own chart analysis, really. So how is the floor identified? It's usually a pattern on the chart. It's usually a connection of lows. It could be a connection of highs and lows. It's usually trend lines or MA lines. It's mostly found on the daily, weekly, and monthly charts. Why is the floor important? Best opportunity for entry with least amount of risk. We just talked about that a little bit earlier. It doesn't mean that there's no risk. It just means that there's less risk. If we're at the bottom, you hear we can only go up from here. Well, we could still go down, but we have the best opportunity of going up from here. It shows us the supports as well as resistances. The floor gives us a sense of confidence and also signals when we should lose confidence. And we talked about that, the number one thing that traders don't do or don't know how to do is when to leave a stock. They have no problem buying into the stock. They just usually buy at the wrong time, and then they hold for too long. And when a stock signals below our floor, it's usually a sign that, hey, we should probably just get out of this and wait for the new floor. It doesn't mean that the stock is no longer no good. It just means that we have no longer seen where the floor is, and we don't have as much confidence of it going up from here. It could continue to go down until it finds a new bottom. So it signals to us when we should get in, when we should get out, when we should begin to lose confidence in that stock. It reduces the risk by implementing discipline, and that's why I said at the beginning of the video is that traders have a hard issue with discipline, and this is like probably, I would consider this the basics 101 of what you need to implement, because the number one thing that I had trouble with when I came into trading was discipline. I came into the market and I treated it like a casino. Sometimes you win, sometimes you lose. I was mostly just a day trader at the time. Now I go into stocks more long term. I have a job. The reason that I think that this is so important is because you don't have to quit your day job to do this. You can find stocks, find the floors, set buy orders at those floors, and then set sell orders and just walk away. And that will be another video that we'll go into of buying and selling, how to get into stocks, how to get out of stocks. But this video is mainly intended on how to find that floor. Another term that people usually call it is the buy zone, really. So what's a floor look like? It's usually a connection of 2 points, and when I say that there's a connection of 2 points, we'll go over it on the charts in a little bit here. But the connection of 2 points, if there's more points that connect, the stronger the confidence we can have that that floor is being held. So the more points that there are being touched on our floor line or our MA line, we can be confident that that's going to be our floor. And if it goes below that floor, that's when it signals to us that we should probably lose confidence at this point and back away. It could be the floor could look like a bunch of previous lows or previous highs. We mentioned that already, that it could be MA lines or a trend line. Each chart is different, so you could be using an MA line for one stock and a trend line for the next. But in my opinion, what I have come to see is that a trend line usually stands out as more confident than an MA line. And I've got some charts that we're going to go over where you'll see some of that as well. It's usually clear and obvious to us. The floor is usually very clear and obvious. We don't even have to question it. So that's the end of the little PowerPoint. I know this video is going real fast. I'm trying to make it short for you guys. So quick, we're going to just go over a few charts that I really like, that have traded really well for me in the past. Maybe they're trading for me really well right now, but again, these are not signals for anybody to buy anything or sell anything. This is just reviewing the charts as a learning process right now. So APTY, you can see back in May, see I have this trend line right here. You can see some of my MA lines here, and as you can see, it's not really trading above or below. It's kind of just trading wildly back here in May. But you could see how I made this trend line here where I actually connected, we had this little bounce off the trend line right here. We had these other bounces off the trend line fighting up and above, up, down below, up above, this creates, remember we said the more points that it connects, the stronger the confidence is in the floor, right? So you could just review your graphs and find some sort of line like this and use that as your floor. And the key is to then just be true to your floor. That's what's going to make you a profitable trader, is you're disciplined in that, so that when it breaks below your floor, hey, I should get out of this at this point. You don't have to ask people. You don't have to question yourself. You just build confidence in this line and build confidence in yourself. Okay, so you can see back in May, we had this it was trading along the trend line here. So as it's building on this trend line here, this is giving me more and more confidence that this is a solid floor here. So what I did was I started to nibble here. I just started to nibble. It'd jump up a little bit, it'd come back down, I'd nibble a little bit more. And then as you can see, into June, we started having the rally where it started going above the MA lines. Something that another trader that I respect very well taught me something about just in case shares. When stocks go above the MA lines like this and get away from the 8-day moving average, that's for another video. But for the sake of this one, we're just talking about floors. So then you can see we got way away from our floor, right? And at this point, I'm walking away from profits. I bought way back here. And then this is when the rest of the community, the rest of Twitter, the rest of Facebook, other traders are starting to see this momentum. This is where I was buying when I first began trading, right? So if this was me and I was buying up at the top here, who was making the better trade? The guy that was trading in these little sections, or was it me who bought back on the floor line when the stock was most hated? Okay, so APTY today, right? We're pretty far away from the floor. So I've taken my profits, right? But this is still a good stock. So if, say, you were going to buy this today, where would we find our floor? Could we use an MA line? Well, we're pretty far from the 200 MA, and this is the daily chart. Weekly chart. Let's see what's going on. I like to switch between the daily, the weekly, the monthly to kind of see a better view of what's going on. Where do I find a floor? Do I find a floor on the weekly chart? Well, let's take a look here. We're trading below the 8 MA. We're not really fighting above it. We're above the 21 moving average here, but we haven't really touched it, right? We haven't really come down to it on the weekly. So let's switch back to the daily. So the daily, we can't really use the 200-day moving average because that's pretty far away. We can see that it's broke below the 50-day moving average here, and it's kind of going back and forth. All the MA lines are kind of getting intertwined right here. You can see there is a bounce off of the 21 right here. If you wanted to, you could maybe use the 21 MA. But like I said earlier, I tend to like to use an actual definitive trend line rather than the MAs. And each chart is different. Sometimes it might be the MA line, maybe. But if there is a clear trend line where I can draw a line, that stands out as more confidence for me. So where could we draw a line here? Right? Well, this is what I would be seeing right here, okay? So this is my previous trend line, this teal line down here. Let's draw, if I wanted to buy this today, what would be a good place for me to see that it's not going to go below? Okay, well, we'll start back here, right? Because remember, the more points that it touches, the more confidence that we can have. So let's start back here, and we'll have that as a first one. Here's one. And this one's kind of, we don't see really a tail on that candle, so I'm not really going to count that, but this one's got a tail where it came below and pushed back up. We've got another point right here, right? So to me, this would be the perfect floor right here. Now, it doesn't mean that you have to wait for it to come back to this floor. If this was me, I would maybe nibble here and there, and when it comes back to the floor, I'd nibble more. Comes up above it, I'd nibble more, and I'd wait for another big run like this. Now, like I said before, the trend line gives us confidence in that it's probably not going to go below that level. But there's always that risk, right? We can see in the chart that currently it's not showing a lot of risk of breaking below this, but there is still that risk that it could. And that's when, if it started going below this line, trading below that line, that would be a signal to us that we should probably lose confidence. Now, that might be just my opinion, and maybe some people are pretty mad that I said that because maybe you just really love APTY. Again, it doesn't. If something breaks below our floor, it doesn't mean the stock is bad. It just means people are selling it. APTY, I really like this stock. It made me a bunch of money back here. So I'm still bullish on this, and I'm still accumulating on this trend line because that's where my confidence is in it, right? So let's go to another one. Another one that I have been accumulating that I really like, right? GTOR. I believe this is a gaming stock. We can get rid of this. I don't know why that's in there. But as you can see, looking at this had a previous high of 23 cents back here, back in February. And now it has come down. People have sold it. It's come below all the MA lines. And now we can see that it's no longer trading downwards. It's beginning to slightly go upwards. But you can see where I've made this trend line here for myself that shows me where I should be accumulating and where my confidence should be in the stock. That if it comes below this, that's maybe time that I should exit. But as long as it's still above it, it's still bullish. It's trading upwards. It's making higher highs, higher lows. But you can see that we've got 1 point, 2 point, 3 points, 4, 5, 6, 7, 8, 9, 10 points that this is on. So to me, this shows me that there's a lot of confidence here that I could use this as a definitive floor for myself, right? You could also be trading the MA lines if you wanted to. Let's go in here a little bit. Can you see that blue line there? That's the 50 MA. We can see that it pushed up above it here. We can see that it fell down and pushed back up right there. It fell down, pushed back up here. It fell below this, but we still had a nice green candle, another green candle. It fell below, but it's still pushing up, fighting above these MA lines. So you could also, if you wanted to be more conservative with your trading, I would say the 50 MA would be pretty good place to start. Or say you bought it today, maybe you bought it above the 21 MA. Then I would use the 21 MA as your floor if you wanted to. But again, remember, this is all perspectives based on you. It's not based on who gave you the stock, what somebody posted about it. It's all about where you got in and where do you see the stock. Because if you were me, and say you drew this line here, and you identified that's your floor, and you bought on yesterday's green candle at 0.0386, right? You bought somewhere in that range. Well, if this was your floor and you bought up here, then you at least can manage your risk and know where it has the possibility of going to, right? Because it has the possibility of still going back to our floor to possibly make it another bounce off of it, and that's what we would be looking. So maybe you bought a little bit yesterday, and if it comes back to the floor, that's where I would be adding to my position, right? To build more confidence in that line. Let's go to another one. UAMM. This one is crypto as well as NFT stock. Okay, so a while ago, I started accumulating this. UAM had a big rally back before. I traded it back here, right? It had this big push up to 16 cents, and then we went into this downtrend where everybody sold off, and it came down to a point, right? We can see that the first point that it kind of bounced off of was the 200-day moving average here. It kind of bounced off of that, and then it kind of bounced off that 200-day moving average some more in here. But like I said before, I like to use a trend line, right? I like to use the trend line over the MA line. There's no really right or wrong answer, but let's use this chart as an example of why I like to use this more. All right, so it was trading above the 200-day moving average. So if you were another trader, chances are, if you weren't using a line, you were probably using the 200-day moving average, which is totally fine. But we can see that it had broke below the floor, the 200-day moving average, a couple days here, and kind of traded really wonky under that, where it could have made traders really nervous, possibly even exiting, right? Well, for me, I was using these trend lines. I was noticing that it was only going up to a certain point, which was then I identified as a resistance, right? You see this? And I was noticing that it was going down to the line here, creating a support, which that's what I made as my floor, right? And then we had, this big push above it, right? And we'll talk about this in more videos, but usually when a resistance is broken, it then becomes a new floor, right? So this broke above that, and then we can see that it bounced off that resistance line for a few days, almost the entire week, and then it kind of broke down for 3 days, but we didn't fully go down. We kind of bounced off the 21-day moving average, and then it got pushed back above that resistance level, and now you can see that we are now beginning another rally with it. So when this broke above the resistance line, I was taking my profits. I'm not a very greedy trader. Some people, they hold out for 100%. I have my own personal profit margins that I set ahead of time of what I'm going to sell at. So by the time this got up to 6 cents, I was already out. But then we can see, I had my resistance line. So then I was looking for the opportunity to get back in. So the resistance line has now become the new floor, right? So that's where I started accumulating this stock again, was right around that resistance line. And now you can see we're going into another rally here. All right, I'm going to show you a little bit different one. Tesla, right? Everybody loves Tesla. Okay, so Tesla back in the day brought me enormous profits. I fell in love with this stock. Trading the MA lines with this, it became second nature. This stock was, I'm trying to think of the word, but it's almost like I could predict what was going to happen with this stock because I had been trading it for so long. So back in the day, I actually exited out of Tesla back here, and it kind of did some weird trading here, and I noticed that it hit here, so I quickly drew a line up there, right? Because that was kind of a resistance level. And then for months, it just traded like this. It came back down. It hit a point here and then traded back up, came back down, and then right here, it kind of seemed like it was going on an uptrend. But since I had drawn my previous line here, I knew that this was now a resistance line. So I wanted to see what it was going to do and how it was going to react when it got to this level again. And as you can see, it got to that level, and that's when it kind of went haywire again. It couldn't keep above the line and then ended up trading back down, hitting the same point again back here. So we had 2 points. So then I identified a floor, drew my floor in there, and this is what they then call a wedge break, where there is a break between the floor and the resistance line going into a wedge. So you can see we were going into the wedge here, and what I was looking for was either, was this floor going to support it, or was it going to give and show me that it's going to just continue down, or is it going to break the wedge, break the resistance line, and create a new trend? If it breaks the wedge, that identifies to me that a new floor is being put in, and maybe I should start building confidence in buying a stock here. So we can see here, I'll zoom in, it broke above this level, right? So I started accumulating Tesla at this point. And me, I'm long on Tesla, so I don't really swing trade this one. I kind of was just looking for the best opportunity. Now when this begins to lose confidence, I'll get out again and wait for a new floor. But now that we have broken our resistance level and the trend line on this, the question is, where's the floor now, right? Well, what could we do here? We can see that it's trading at an uptrend here. So I would take our previous bottom here, maybe even start our line right here. So I would take the line here, and let's do an extended line. And now look at all these points that we've hit, right? I'm going to go up a little bit so then we can get this back one in here. But you can see now we have 1, 2, 3, 4, 5, 6 points off of this, where now if I was looking to get into Tesla, this would be my floor that I would be using. You can see that it's kind of just going all over with the MA lines. So to me, the MA lines wouldn't be the greatest decision here. You could see the 200-day moving average, it is kind of trading around that 200-day moving average. It bounced up above it here, bounced above it here. That would be a good one, I would say. If you wanted to use the MA lines, the 200-day moving average would be pretty good. You can see that the 200-day moving average is actually starting to intertwine with our floor here, with the trend line floor. So if this was me and you were looking to get into the stock, I would say that the confidence would be in this floor right here, right? And then I know that if it continues up this line, if it ever breaks below this line, then I know maybe I should stop losing confidence and exit out of this trade, right? This is to help you become a more disciplined trader. You hear it all the time. I hear it from my mentor, my friends. Trade what you see, not what you hear, right? So I trade off of what I see and what I see on the chart. I could care less what the financials are of a stock. I could care less what the company's really doing. I like to find stocks that are kind of in sympathy play to what's going on in the world and what's relevant. For instance, Tesla, we got all the infrastructure, we got the Green New Deal, we got electric vehicles coming out constant now, the big push for that. So that's why I kind of like these stocks. I try to find stocks like that. And like I said, I don't really care whether or not they're putting out news. I like to know, are they in the sector that I'm looking at? And what does the chart show? Does the chart show that it's in an uptrend? Does the chart show me a clear and obvious floor where I can begin building confidence in the stock to manage my risk, right? And get in before the other traders, before all the hype. Because when a stock finally takes off, that's when everybody wants it. That's when everybody's jumping in, and that's when I'm selling. I'm selling my shares to those guys because I bought in at the floor. And when the hype is over, it comes back down, and guess what? I'm buying it at the floor again. So one more real quick. We're going to talk about it. Bitcoin. So Bitcoin. Sorry, my trend line is actually not in the right place here. Okay, so Bitcoin, right? We had this huge push over the last year. It was following the MA lines. It was good. These were good floors back then. Back when it was trading above the 8-day moving average, that was a good place to really be paying attention. The 21-day moving average, and we could see that it pushed below the 50-day moving average back here. So that was a clear floor for us back then. But then you can see in the last few months, we've broke below those MA lines and actually went into a downtrend. And what I was looking for at this point is I had already exited out of Bitcoin, and I was looking for a new floor, right? So where is the first point where we bounced, right? So we came down here, we had a huge drop and a huge push up, right? So there's some sort of support there. You can see some other candles, they're showing the same type of support down here. Now, when this happened, I drew a line right here. At this bottom and at this bottom, right? Which was in between 28 and 30,000. That's where I was looking at the stock. That's where it was having these support pushes, right, where it would touch and immediately bounce. So I was making any purchase between 28 and 30,000. I began accumulating here. If you were in the Facebook lives, you know exactly what I'm talking about. We talked about this in there. And then you can see we had one last drop down, which was like a little over 29,000, which was my last purchase. And now we're in this uptrend pushing above. Now, at this point, what could we be using as our floor on Bitcoin? Right? Because now we've gotten away from this floor, and now we're following new trend. What could we be doing? Well, we could be using the MA lines. I mean, it's going above the 21-day moving average, right? We've come down a little bit to them and pushed back above. We've broke above the 200-day moving average. We could be using that. We're kind of threading the 8-day moving average. We can see that on today's candle, we're kind of pushing back above. We touched the 8 MA and we're pushing back above. So you could use that as a floor if you wanted. Let's say you were using the weekly chart. You could have been accumulating at the 50-day moving average on the weekly chart. We're breaking above these lines. But if you were going to buy this stock today, I would say there's a lot of risk here, right? Because we know that it's on an uptrend, but if you wanted to get the best price, so if you bought it right now, it doesn't mean that it's going to all of a sudden go downwards or be in a downtrend. It's not a bad purchase. It just means that you maybe could have got a better price. So, and that's how I am. I like to buy things at the cheapest price possible that I can get. If it doesn't get to my price and it goes away from it, I just let it go. I don't really care about missing it. I just like to buy at the floor levels because it builds the confidence. And like I said before, like we've talked about, it creates the lowest risk, right? So if I bought Bitcoin up here, there's risk of it coming down some. And I would like to buy where there's a floor. So what could we do right now? We could, let's draw a line, because I like trend lines more than I like the MA lines. And each stock is different, but all right. Now we've got a connection of 3 different points here, right? So that would be good. What could we do for, say, a resistance level? Right? Because now it's kind of trading in this channel. Right? It's kind of trading in that channel there. We've got some highs where it's not breaking above a certain level. We've got some lows where it's not breaking below a certain level. So if you wanted to day trade this, if you wanted, a good place to indicate would be buying at the floor, selling at the resistance, right? That's what would be good about managing our risks. So yeah, that's all I got for you guys tonight. Next video, we're probably going to go into some more teaching. What we're going to be doing is doing a weekly broadcast. Um, Probably start doing like a weekly watch list. So I hope you guys stay tuned. If you enjoyed this video, like it, subscribe it, share it. Anything helps. I really appreciate you guys that have been backing me and supporting me. And I've got people that I'm working with, and I'm just really excited about the future and excited to see you guys become more profitable traders, because that's what it's about, is becoming profitable and becoming free, right? So you guys take care. Have a good night.